Welcome to The Explainer. You know, there's a visual language out there that drives billions, literally billions, of dollars in decisions every single day. And today, we're gonna decode it. So how do you read the market's mind? I mean, it sounds impossible, right? But believe it or not, for centuries, traders have used a very specific tool that tries to do exactly that. I love this quote. The market speaks the language of candlesticks. It's such a great way to think about it. The market is always telling a story, every single second. And if you want to understand that story, well, you got to learn its language. You've got to start with the alphabet. All right, so let's jump right in and start with the absolute basics, the anatomy of a single candlestick. Think of this as the fundamental building block, the letter A of this entire language. Okay, so every single candle, no matter how big or small, packs in 4 super important pieces of information. It tells you the price right at the start of a period, that's the open. And it tells you the price at the very end, that's the close. Plus, it shows you the absolute highest point the price hit, the high, and of course, the lowest point it reached, the low, all in one little shape. So, those 4 data points come together to create 2 main parts. First, you've got the thick part, the body. That shows you the main action, the journey from the opening price to the closing price. And then you've got these thin lines sticking out, right? We call those wicks or sometimes shadows, and they show the full range, all the way to the highest high and the lowest low. But honestly, the first thing you'll probably notice is the color, and it's super simple, kind of like a traffic light. If you see a green candle, that means the price went up. The close was higher than the open. And if you see a red candle, yep, you guessed it, the price went down. It closed lower than where it started. Simple as that. Okay, so we have the parts, we have the colors, but this is where it gets really interesting. You see, every single one of these candles is basically a snapshot. It's a picture of a constant epic battle that's always playing out in the market. And that battle is between 2 forces, the bulls and the bears. A bullish trend is when prices are on the rise. Just picture a bull thrusting its horns up. And a bearish trend is the opposite, when prices are falling, like a bear swiping its big paws down. So all those things we just talked about, the color, the size, the shape of the candle, those are all clues that tell us who's winning that fight. So, if a single candle is a letter, what happens when you put them together? Well, just like letters form words, these individual candles group together to form patterns. And these patterns, these are like the sentences of the market's language. They can give us some really powerful hints about what might happen next. And for the most part, these patterns signal one of 2 main things. First up, you've got what are called reversal patterns. Now, these are the big ones. These are the patterns that scream, hey, pay attention, this trend might be running out of gas and could be about to turn around completely. And then, on the flip side, you have continuation patterns. These are a little different. They suggest the market is just, taking a quick breather, a little pause before the trend that's already happening keeps right on going. It's more of a confirmation signal. So, okay, that's the theory, but what does one of these reversals actually look like? Let's take a look at a classic textbook example of a pattern that might signal a big downtrend is finally coming to an end. This right here is called the Morning Star, and it's like a perfect little 3-act play. So in Act 1, you see this big, long red candle. The bears are totally in charge, pushing the price down. Then Act 2, this tiny little indecisive candle shows up. See that? That's the moment of doubt. The sellers are starting to lose their grip. And then, for the finale, Act 3, bam, a big, strong green candle appears. The bulls have officially charged in and taken over. It's a really powerful sign that things might be about to head back. And of course, it works the other way too. What goes up? Well, it can definitely come down. And yep, there are patterns that signal that shift as well. This is the evening star, and it's basically the mirror image of what we just saw. It's the same story, just flipped. You start with a strong green candle. The bulls are having a great time. Then that little candle of indecision pops up as the buying pressure starts to fade. And finally, you get a powerful red candle. The bears have crashed the party and taken control, hinting that the price might be about to fall. Okay, now, before you get all excited and start hunting for these patterns everywhere, I need you to pause, because there is a huge, massive, really important word of caution we have to talk about. Listen up, because this is probably the single most important thing to take away from all this. The patterns show you chances. They do not, I repeat, do not show you guarantees. Think of them as clues, as educated guesses based on what's happened in the past. They are never ever a promise about the future. All right, so let's do a super quick recap of everything we've covered. We learned that every single candlestick is a little story with 4 parts: the open, high, low, and close. We know the color is a dead giveaway for direction. Green means up, red means down. We saw how candles group together to form patterns that can hint at a trend, either reversing or continuing. And the most important rule of all, patterns show you possibilities, not promises. Always remember that. So there you have it. You now know the alphabet of the market's language. And that story is being written right now, one candle at a time. The only question is, now that you know how to read it, what story is the market going to tell you?